Kathleen Gaffney, you picked up energy paper during the fourth quarter, during oil's rough patch in the Eaton Vance Bond Fund. Are you going to stick with that trade because oil's coming back? Is that a temporary trade or a long-term one?
We're long-term investors, so we're going to stick with those bonds, but it was a great buying opportunity. You had managers who didn't want to have a lot of energy exposure at year-end. Everybody was on holiday, so we went in and did some great buying.
You're also an owner of Petrobras bonds. This company has had a lot of problems. Brazil's had a lot of problems, but this one in particular because it's scandal-ridden. Why do you want to own this paper?
It is scandal-ridden, but it's also a real asset to Brazil, and really because there are times when you have a crisis when it becomes the catalyst for change. Brazil is facing the potential to lose their investment-grade credit rating within 2 years. So the time is now to deal with corruption, and Petrobras is going to be an excellent example of doing that. We've seen the government as well start to take action towards more fiscal discipline. So yes, Petrobras is an energy bond that's got a few more, I think, positive catalysts that are going to make this a great opportunity.
So you're not worried about the commodity risk in addition to the political risk, as well as all the other risks out there?
I think because you've got so much going on, that actually gives you more of an advantage. Yes, when energy prices are going down, Petrobras and Brazil and the real are going to go down with it. But they also move independently when there's been good news about the government, when the announcement was made that the board is changing at Petrobras. So there are a lot of different things that add to that story to make it a much better investment.
You mentioned the real. What are you doing with the currency? Are you hedging it? Because that's the craze nowadays.
It is the craze, but again, we're long-term investors and we are long only, which causes us to think very differently about how we're going to get our total return. If we try to hedge it, there's an aspect of market timing that you're bringing in to your portfolio. With Brazil rates 10 to 12%, we've got enough cushion there to deal with the currency volatility that if we hedged it out, it would cost us and potentially eat into our total returns. So we go unhedged.
One more risk is the fact that when the U.S. Federal Reserve raises rates, generally it's bad for emerging markets like Brazil, like China. So what's your view about how the Fed raising rates here will impact emerging markets?
Interesting question, because we actually saw a lot of issuance in emerging markets, dollar pay, in the first quarter. I think a lot of those issuers were thinking, okay, if the Fed tightens, we better get in and issue at attractive rates now. So they've done some of that. I think it's going to be very selective, and it remains to be seen exactly how and who's going to be impacted the most by tightening. It could, in fact, be fixed income investors here in the U.S. that react the most strongly to higher interest rates.
And you think that hike's going to come, it was supposed to be June and then September, now people are talking December. When do you think?
I would like it to be June because I think the economy's in good shape. We had a CPI number that's showing inflation is beginning to build away from low energy prices. I think it's in the Fed's interest to move earlier rather than later, but I agree, it's looking like it's going to get pushed out.
Thanks a lot, Kathleen Gaffney.